Most traders lose the war before they even realize they stepped onto a battlefield. Not because the market was unfair, not because their strategy didn't work, but because they kept fighting battles that never needed to be fought in the first place. There's an old idea from thousands of years ago that says the greatest victory is the battle you never fought. And in trading, that truth hits harder than almost anything else. The traders who survive long enough to figure this out usually learn it after their account is already damaged, their confidence is shaken, and their relationship with trading is broken. This is the lesson nobody teaches you at the start. But every long-term trader eventually learns the hard way. Here's the uncomfortable truth. Your trading account is not a money-making machine. It's not a tool. It's not something you're supposed to constantly use. It's ammunition. Every single trade you take is a bullet fired. Once it's gone, it's gone. You don't get it back. You don't reload it. You don't undo it. And you only have a limited supply before the game is over. But most traders don't think like this. They trade like they have unlimited bullets. Like they can shoot at anything that moves and somehow survive. Like losses don't really matter because they'll just make it back later. That mindset is exactly how accounts die. Think about how most people trade. They open their platform, see something moving, and feel like they need to do something. They take trades out of boredom. They take trades to feel involved. They take trades because sitting in cash feels uncomfortable. Losing $500 today doesn't feel like a big deal because in their mind, tomorrow is a fresh start. Except tomorrow comes and they lose again. Then again, and then, suddenly, they're staring at a chart wondering how everything went wrong so fast. Nothing mysterious happened. They simply forgot what capital actually represents. Your capital is not just money. It's access. It's opportunity. It's your seat at the table. It's permission to participate. The moment that capital disappears, your opinions don't matter. Your strategy doesn't matter. Your edge doesn't matter. You're done. You're watching instead of playing. And that's the part most traders don't respect until it's too late. Let's make this real. Say you have $10,000 in your account. Most traders see that as buying power, as freedom, as room to trade whatever looks interesting. But that's not what it is. If you're risking 1% per trade, that account is 100 trades. That's it. 100 bullets. And every time you take a trade that doesn't deserve your capital, you're throwing one of those bullets away. You don't notice it at first because the losses feel small. 1% here, 1% there. But suddenly, you're not at 100 anymore. You're at 80, then 60, then 40. And here's the brutal part. The trades you waste early are the trades you'll desperately need later. Most traders burn their ammunition on mediocre setups. Trades that kinda look okay. Trades that might work. Trades they wouldn't feel amazing about if someone asked them to explain why they took it. Then, when the real opportunity shows up, the clean setup, the one they actually studied, the one that perfectly matches their edge, they don't have the capital or the confidence to fully execute. They size down. They hesitate. They second guess. The opportunity was there, but they weren't ready for it. That's why capital protection isn't just important. It's everything. You can have the best strategy in the world, but if you don't protect your account, you'll never survive long enough to benefit from it. The market doesn't care how smart you are. It only cares how well you manage risk. There's another cost most traders never calculate. The real cost of a bad trade isn't just the money you lose. It's what that money could have done for you later. Lose $500 on a weak setup today, and that $500 is no longer available when the perfect trade shows up a few days later. That loss forces you to trade smaller. Or worse, it forces you to trade scared. You're no longer executing cleanly. You're reacting. That invisible cost is what destroys careers, not the single loss, the chain reaction it creates. Most traders understand capital protection on a surface level. Ask them if it matters and they'll say yes. Of course it matters. Everyone knows that. But then they trade like it doesn't. Because deep down, they don't see capital as sacred. They see it as replaceable. They believe they can always deposit more. They believe they'll figure it out eventually. What they don't realize is that money isn't the hardest thing to lose in trading. Confidence is. Trust in yourself is. Once you blow an account, something changes. You start doubting your decisions. You start questioning whether you can be disciplined. You carry that damage into every future trade. That psychological scar is far more expensive than the money you lost. Now here's where things flip for most traders if they're willing to listen. Not trading is actually a trade, and it's often a good one. This sounds strange at first, but stay with it. You spend all your time looking for the perfect setup, the clean alignment, the situation where everything makes sense. Those don't happen often. Maybe once or twice a week if you're lucky. But what you see constantly are almost good setups. Decent structure, decent volume, tradable, but not special. Most traders take those trades because they don't want to miss out, because it feels productive, because they tell themselves that small edges add up. But here's the math they ignore. A decent setup might win slightly more than it loses. Over time, that means stress, drawdowns, commissions, and emotional fatigue. Now compare that to doing nothing. No risk, no stress, no emotional drain, capital fully preserved. You end up with a similar result without paying any of the costs. That's why sitting in cash is not weakness. It's discipline. Every time you don't trade, you stay sharp. You're not managing positions. You're not emotionally invested. You're not making constant decisions. You're observing, waiting, preserving energy. And when the real opportunity shows up, you're ready, fully focused, fully funded. No distractions, no baggage. Treating capital as sacred means every dollar in your account has to earn the right to be risked. The question isn't, can this trade work? Almost any trade can work. That's not a standard. The real question is this worth spending limited ammunition on? Because that's exactly what you're doing. You're spending something finite, something malleable. A simple rule changes everything. Rate every setup honestly, not emotionally, not optimistically, based on how closely it matches your proven criteria. If it's not strong, don't trade it. Sit in cash. Execute the no-trade trade. Yes, you'll trade less. You'll miss moves. You'll feel inactive. That's the point. Missed moves don't hurt you. Bad trades do. Trading isn't about catching everything. It's about surviving long enough to catch what matters. The mental shift that separates professionals from amateurs is defense. Most traders are always on offense, always hunting, always attacking. They think trading is about being aggressive. It's not. Trading is about not losing. Once you master defense, offense takes care of itself. Think of your account like a fortress. Every trade opens a gate. An open gate means vulnerability. The more gates you open, the easier it is for the market to take from you. Your job isn't to open gates constantly. It's to protect them. Only open one when the potential reward justifies the risk. Not trading should be your default state. Safety, preservation, readiness. Trading should be the exception, a calculated decision, a deliberate act. When conditions are right, most traders do the opposite. They're exposed all the time, always in something, always vulnerable. They think being in trades is the job. It's not. Being in the right trades is the job. When you pass on questionable setups, you're winning defensively. You're stacking small victories that compound over time. That's how you outlast people who are constantly bleeding capital. Here's a filter that stops impulsive trading cold. Ask yourself one question. If I only had 3 trades this week, would this be one of them? If the answer isn't an immediate yes, don't take it. That question forces honesty. It reminds you that opportunities are limited and capital is precious. Most traders would be better off taking 3 great trades a month than 30 average ones. Activity feels productive, but it's usually destructive. The more you trade, the more chances you give yourself to be wrong. Selectivity increases quality. Quality increases consistency. This isn't about fear. It's about respect. Respect for capital, respect for probability, respect for longevity. When you protect capital aggressively, something powerful happens. Your account becomes resilient. Choppy markets don't hurt you. Slow periods don't drain you. While others are forcing trades and losing money, you're preserving strength. Then when conditions improve, you're ready. Full capital, clear mind, no need to recover, no emotional damage. That's how professionals outperform without trading constantly. They wait, they preserve, they strike when it matters. If you're worried that not trading means not learning, understand this. You don't improve by taking bad trades. You improve by studying, reviewing, and executing only when it makes sense. Losing money doesn't make you better. Discipline does. The traders who last aren't the busiest ones. They're the most selective. They say no most of the time so that their yes actually means something. Capital is your career. Lose it, and everything ends. Protect it, and you have endless chances. You can wait. You can be patient. You can trade like a professional instead of a gambler. Once you truly accept this, everything changes. You stop feeling guilty about sitting in cash. You stop chasing action. You stop comparing yourself to others. You start seeing no trades as wins. You start feeling pride in discipline. And slowly, consistently, your account starts growing. Not because you're doing more, but because you're finally doing less and doing it right. That's the difference between the few who make it and the many who don't. One group treats capital like it's expendable. The other treats it like it's sacred. The market rewards one and punishes the other. The choice is always yours.